With everything happening with tariffs, layoffs, DOGE, constant inflation, stagflation, fear can easily take the wheel. But if you learn how to navigate through it, fear can actually fuel your investing journey. And this is how you can manage your investments when the market is crazy. If you're new here, welcome. My name is Mauli Vodi with Financially Present, and I spent the majority of my career as a stockbroker and investment consultant. Today, we're going to talk about something we all face, and that's fear. When you consider the changes in the government, tariffs are here one moment, then they're delayed the next, interest rates and the impact to housing and job markets, it's no wonder why the stock market continues to just be sensitive to all of these different changes. Fear continues to be really, really high. But I have these 8 steps that you can use right now and manage through this situation and any other fearful situation to come. But before I do, quick story. A while back, I spent an hour 1,000 feet high at this place called the Summit in New York City. So for perspective, I'm someone who's pretty comfortable on airplanes. I love roller coasters, but I didn't realize I had a true fear of heights until I was already at the top of the building. So we had a day to spend in New York, and my wife saw the Summit on TikTok. And when she told me, I was like, all right. I wasn't excited, but I wasn't scared either. So I'm like, okay, cool, let's do it. We get there, and there's this elevator you get into, and it's fast, but it's smooth to the point that you don't even realize how fast you're going up until you feel the pressure change in your ears. We hit the 91st floor, and the first thing that hit me wasn't the view, it was fear. It was so overwhelming. There were mirrors everywhere, and it made it hard to just tell what was up and what was down. And there was people all over. And I started to feel a little disoriented, but here's the twist. The longer I stayed in that space, the more I started to adjust, just like the market. You see, in investing, we can't control what happens, whether it's inflation, tariffs skyrocketing, or a company's stock price suddenly dropping. In moments like these, it's easy to let fear make your decisions for you. It's easy to pull out, to second guess. But what if you actually stayed in the game? What if you held on to that stock? What if, like me, you stayed on the 91st floor long enough to adjust to the situation? When I stepped onto that observation deck on the 91st floor with its disorienting mirrors, I felt the fear. I didn't even realize it until my wife pointed it out. She said, "You're shaking." I remember saying, "It's a lot going on. I just really need to just slow down for a moment." So slowly I adjusted. I ended up being there for an hour, and the view was amazing. It's one of those things you can only truly appreciate it when you see it with your own 2 eyes. And that's exactly what you have to do when it comes to investing. So when it comes to investing, here are 8 actionable steps that you can use to tackle investing with fear. Number 1, don't act on impulse. It's extremely easy to just look at fear and take action. When you compare fear and logic, out of instinct, we naturally react quicker when we're driven by fear. Just take a moment to pause, address how you're feeling, and then pause again. Because historically, the stock market rewards patience and not panic. So if you have the urge to bail or sell, just hold on for a moment and follow the next step that I have for you. And that's confirm your investing style. Are you a long-term investor or a short-term trader? Or are you a swing trader? Do you have specific accounts that allow you to do all of these types of trades in different places? If so, that's cool, but all of it matters because it's going to help you decide how strong of a reaction you need to have during times of fear. It's really easy to forget what type of investor we are when the market has crazy swings on a daily basis. Because the fact of the matter is that if you are a long-term investor, you may not need to change much at all, depending on your age and your situation, because you may be doing perfectly fine. The next thing you can do is build your confidence. Especially if you just started investing more recently, continue with the same amount of investing, especially if you feel nervous. I would encourage you to actually invest a little bit more, but it's okay if you just keep it the same. If you want to test something out, but you don't want to have to use real money, then you can use virtual trading. Just use a practice account or simulation tools. These are free of charge. And you can see how markets react without risking your actual capital. But I say that with a caution. I don't want you to get used to doing that only because you're only going to get the full experience if you just bite the bullet and use real money. So Something you can do to fight your investing fear is to just educate yourself on a regular basis. Keep up with financial news and just understand how current events like recent market volatility and economic trends influence investments. Follow trusted sources and join online communities where there are forums and other investors that can share their experiences and their strategies. This is going to help with understanding all of the noise that's associated with the market. You have to decipher what actually matters and what you need to tune out. And I personally don't like to believe what people say. I'd rather believe what they actually do. Another step you can take is to diversify your portfolio. Just make sure your fear addresses whether you're diversified or not. Are you even diversified enough? There are thousands of stocks. And if you look, are you only focused on the tech sector and consumer discretionary? Those are literally the most risky ones. So you're even more sensitive to what's going on in the market compared to someone else who has more balance in their portfolio. Spread your investments across different sectors and asset classes. Diversification can help manage risk and reduce anxiety during market downturns. One other step that you can take is create a risk management plan. It doesn't have to be fancy, but you just have to set clear goals and limits for your investments. Define how much you're willing to lose before stepping back. It's just like entering a building and making sure you know exactly where all the exits are. So if you're a short-term trader, use stop loss orders, and you can set aside some emergency fund to just provide a safety net during these volatile times. Something else you can do is establish a regular review routine. You don't have to look at the market every single day. Just schedule monthly or quarterly reviews of your portfolio. And this is going to help you stay informed and adjust your strategy as needed. If you reflect on your investment journey in a journal, you'll be able to take note of things. Note what works, where you feel there's some uncertainty, and then you can just research some ways to improve. Another thing you can do is just simply look at the facts. The truth is, the stock market as a whole performs really, really well in the long term. Historically, bull markets, so market periods where there are rising prices, those last a lot longer than bear markets, and that's when there are periods of down markets. The extended periods of growth more than make up for any of the bear markets. So if you're willing to sell your stock while you're scared, there are people who have actually been waiting for these times so that they can just jump in and buy shares at a lower price. Remember, the name of the game is buy low, sell high. Another thing to remember is that the market is really, really resilient. Even after major market dips like the recovery from the 2008 financial crisis or the 2020 COVID-19 pandemic, the market not only bounced back, but also reached incredibly new record highs, highlighting the overall upward bias. So back to my story. When I was on that high rise on the 91st floor, they had an opportunity where you could stand on a clear glass ledge, and my wife wanted to take a picture on it. And I said, no, I'm good. I'll stand in line with you. But the longer I stayed in line, I started to calm down more. And then I asked one of the workers, how was your training when you started here? And he said, oh, they just throw you up here from day one. And then it occurred to me that sometimes you have to get used to the chaos, whether you like it or not. And that's exactly like investing. The more you educate yourself, the more you invest, even in small amounts, the more familiar you are with the environment, the more comfortable you'll become. You'll learn to ride the ups and the downs, just like I did. Think of it this way. The market might be unpredictable right now with rapid changes in the government, trade wars, tariffs, concerns, and layoffs that are making headlines every single day. But instead of letting those headlines paralyze you, use them as an opportunity to just review your strategy, diversify your assets, and adjust your risk management plan. So please don't think that you have to sell everything and go to cash. Remember, you can still find some calm in the storm. By the way, I eventually stood on that ledge and took the picture. I just made sure I didn't look down. But here's my challenge for you today. Take one actionable tip from this list and just implement it this week. Whether it's opening a practice trading account, reading up on market trends, or setting a risk management rule for your portfolio, just make that move. If you found these tips helpful, please share this video, subscribe, and turn on notifications so that you don't miss out on financially present content. And drop a comment below. I would love to know one fear you have about investing and which tip you're going to try first. Until next time, stay present.